Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, I know it's been a fair old while since I last updated YouTube, but we're back finally, and I'm going to start with Bitcoin and Ethereum today, try and hit 2 for 1. Can't say when I'll next be back, so let's try and make the most of it. Right, we're going to start here on the long time frame on the BLX, Brave New Coin Index. And we're going to look at the primary bullish count, and then the bearish count, and then the bullish alternate, and then we're going to come down to the smaller time frame, and then we're going to go over and have a look at Ethereum. So, first things first, the long-term bullish count is still intact, has been this whole time, and the low we put in November 22, almost a year ago, not quite, another month or so to go, is still holding. So the primary count is that was the low. Since then we've completed this bearish corrective channel, we've moved out of it, back tested it and moved higher in a 5-wave structure, which I'm counting as an impulse. The 4 doesn't overlap the 1. The 3 is not the shortest wave, everything's legit. You can count this differently, you can count it as 1 to here, 2 to here, 3, 4 as a triangle, 5, or you can count it as I've done here, 1, 2, 3, 4, 5. It doesn't really matter. We're saying it's 5 waves up. Since then, we've completed a sideways correction in the form of an expanded flat. So let's just remove this pitchfork. So we had 3 waves down in an A, an expanding flat in the B wave to complete the B at -degree, and then 5 waves down in the C to complete the C, and from there we've gone a 1 and a 2 and the 1 and the 2 at minuet and sub-minuet degrees, looking to move higher. And that is essentially what we're looking at here with Bitcoin on the primary. So we're now expecting the low here on the 11th of September to hold, and for us to move higher in a larger wave 3 at intermediate degree, within wave 3 at primary degree, within wave 3 at cycle degree. So it is an extremely bullish count. Now, that's the primary count, so let's come over and have a look at the bearish alternate. The bearish alternate is that we are only halfway through an exceptionally deep and long bear market, with a cycle wave top completing at cycle wave 1 in November 21. Since then we've had a year swing down into November 22. We've had almost another year long swing, but not quite, out into the summer of a 6-month swing. It depends whether we go higher or not, but let's assume it's over. So 6-month, 7-month swing into July 23, and then we will get a roughly equivalent time down into the summer of 24. It could be earlier, it could be later. Using the fib time extension tool, we've got the 618 golden ratio here based off of that pivot for the X wave in July 23, brings us out to March 24. A 1 for 1 with the first wave down would bring us down to July 24. We still have a lot of evidence to suggest that if this is the case, we will likely find support prior to the 2018 low, around, I reckon, somewhere between $8,500 and $12,000. So if we just bring that up for a moment, we've got our demand wave, demand zone here, sorry, with our fixed range volume profiles with overlapping points of control for all of this. We've got, that brings us into this little target zone down here. We've got our target fibs based off 1-to-1 pivots off of both the W from the X and the A from the B. The only reason I've done that is just because to adjust for the skew of the logarithmic chart, because this is going to be well over an 80% decline, and I just want to consider the major pivots, okay, in terms of where we might be extending to. This brings us also to an 89% retracement, 90% sell-off in linear terms, which is 10,385 spot 92. It could be lower, but either way, our 1-to-1s off of these pivots bring us into this demand zone. Same with this 89% retracement. If we look at that in the golden ratio in log measurements, logarithmic function, we've got the 61.8% golden ratio overlapping that 89% retracement. So, super simple. If we've gone W, X, to here, and we've now gone 1 and 2. We're about to absolutely implode. Things are going to collapse violently because we're about to enter a wave 3. Okay, so that is the bearish count, and it's still possible. I wouldn't have it as an alternate if I didn't believe it was possible, and to be absolutely honest with you, I think it would be preferable. I wouldn't mind getting the opportunity to buy Bitcoin between 8.5 and 12 grand at all. I would not turn my nose up at that, but I do feel I've missed that opportunity. We won't get that opportunity, I should say, and yeah, the last time I loaded my bags was between the June and November lows. Probably not as much as I should have, because I am pretty sure that that was the low, and won't really get another opportunity from this point now. But enough's enough. You've got to be happy with what you've got. If we do come down here, I will be perfectly happy to buy more. So that is the bearish case. We'll head down somewhere into this area. So we've covered the primary, which is we think the low's in, and that we're going higher. And let's just zoom in on that again. So 5 up into a 1, A, B, C, completed expanded flat pattern, into a 2. Now, I had somebody take issue with this who said, well, it's not an expanded flat because the C didn't go beyond the A. Yes, it did, because the A is not this dominant pivot down here. This itself was a flat pattern, and we had a zigzag into the A, then we had a flat pattern into the B, then we had the C. So as you can see, the C definitely did come below the A, and the B definitely did expand beyond where the A began. So it is an expanded flat. Besides the point, it is perfectly legitimate structure regardless. Now let's have a look at another alternate. Okay, so this is a bullish alternate, which I've got on the back burner as well, which is we've still had 5 up off of the low. We've done this slightly differently here, where instead of going 1, 2, 3, 4, 5, we've taken the pivot all the way up to the top here for the wave 5. So what we've done is we've gone 1, 2, 1, 2, 3, 4, 5, 3, 4, and 5 into a 1. This now becomes 5 into an A. We've completed the B likely yesterday, and we are now going to rocket down in a C. Okay, now this gives us a deeper retracement for our wave 2 intermediate degree, which once again I would not scoff at the opportunity to buy. So here's this 61.8. If we were to just come off log for a moment and see where that brings us, let's do a 1-to-1 extension of the length of the A from the B. Okay, that brings us bang into the golden zone between 65 and 61.8. That could be where she actually wants to go. If we break the recent low, the recent September low, this will become this bullish alternate will become the bullish count. At which point, whether or not I prefer the overall bearish count to the new bullish count is something I'll have to decide then. But let's see if this low in September the 11th holds. Okay, so now that's basically Bitcoin on the longer term time frame. Let's just bring up the moving averages for a moment. As we can see, we had this sustained period of the 60 exponential moving average below the 250 exponential moving average. This was across all the way back here in January 22. It then stayed below that level. That's very indicative of a bearish trend, the bear market. Then we've moved the 60 back above the 250. Okay, and now we've moved back below the 250 and have just popped back above the 60. So this could be a series of 1s and 2s. We've ruled that out on the premise that this is too long in time frame and this is longer in time frame. So I prefer to either get up here in 1 and this is now a 2 back below these levels, which is very typical of a wave 2, or we're going for the primary of the wave 1 to here, and this whole structure is the wave 2, hence why it's come back below the 250, brought that 60 back to the 250 exponential moving average, which was quite typical wave 2 behaviour. Right. So let's now bring up some indicators here to do a little bit of classical analysis. So talking about that bearish trend we had when we went the 60 below the 250 during this period here. So if we just come over here and then we highlight all the oversold conditions we got, okay, in that period until we find a low. Where's the low? There's a low. So as you can see, we have a period of time where the typical bullish behaviour of a series of overbought conditions You see, lots and lots of overbought conditions, and very few, if any, deeply oversold conditions. The bear market's the opposite. We have a lot of oversold conditions, okay, in the RSI, and we have very few strong overbought conditions. So it's the opposite behaviour, and that's one of the clues that we're in a bear market or a bull market, is that's how the strength tends to behave. Now, as you can see, since that low, we've had 1 and 2 lows here, and we've had a strong move up into overbought, and we've had 1, 2, 3 and 4 readings in the RSI which are overbought. Now, if this is the case, that this is now a new bullish phase, we are still in the 1 into 2. We're now entering the wave 3. So I would expect, if we go off to make new highs, that we are indeed in the wave 3, and we will now see a sustained period of very few, if any, oversold conditions, and lots of frequent returns into overbought, right, over the next couple of years. And that would be the next big bull run. So we're not there yet. We can't prove that it's happening, but that's what I would expect to see. That's the typical behaviour. So let's now come out to the weekly time frame and see where we are with these moving averages on the weekly time frame. So we've had our first bullish move off of the low into overbought on the weekly time frame. First pull back into neutral territory, not oversold. We broke the long-term downward trend in the on-balance volume. We're still in a range at the moment. We can see how these lows broke, and we're now currently back testing them. We want to move back in to this range and then break it to the upside. This is quite typical behaviour in price as well as in the volume profile, as these moves out in and out of these ranges are essentially liquidity grabs where we're looking for stops. On that note, the momentum is now dying off. The bearish momentum is now dying off. We're starting to curve back to the upside, but we haven't got a bullish crossover of the average through the signal yet. We're waiting for that. Hopefully a strong move up after this correction, supported by volume and momentum, and a shift back into that range on the OBV and potential break of it to the upside. That would all be very, very bullish. We're still holding the 250 weekly exponential moving average. This is a major moving average on the weekly time frame, and we're still trading above it. The 60, the 10 and the 20 are all trading above the 250 as well, so that's all essentially a bullish looking pattern and a bullish looking setup. Right then, so we'll leave Bitcoin behind now. Well, we'll leave the BLX behind, I should say, and we'll come in and have a look at the small accounts in detail here on the on our other Bitcoin chart. So let's just stay on the 4 hour, and let's bring up a couple of major levels. So we've got minor pivot, major pivot. What I'm looking at here is essentially the first minor pivot is a break of the downward trend. So we have a low, lower high, lower low, lower high, lower low. Now we have a high which has gone beyond that previous lower high. So we've now broken that downward trend. We're now looking for correction, perhaps to this resistance. We won't necessarily always come back to it. It's quite common that you do, but given the very exuberant little burst we had here to break that level, we would have to come down pretty far to do it. We could still maintain that wave to legitimacy by not breaking that prior low, in which case it would then be a free wave structure. But if we do hold before that low, we may come down in 3, test this trend, and then off we go to new highs to the next major pivot, which is 31818, which would now be a new high since in the sequence of higher highs and high lows since November 22, which would be very, very bullish. So let's just have a look here at our channel, just get my bearings. Okay, so let's start with the primary then. Right, so this is how I've counted it. This is the alternate way of counting it, I should say. I put 1 on the BLX to jog my memory that there's 2 ways of doing it, and I put 1 here on the hour of a Bitcoin chart. 1, 2, 3, 4, 5, A, B, C. And then we've got 1, 2, 1, and now expecting a free wave move back at sub-minuet degree. Like I said, there's no guarantee we'll get a deeper move, but I'm just suspect that we haven't had a free wave structure form yet. Okay, this looks like an impulse to me, so I expect to come down in 3. Backtesting the trend is extremely common. We won't necessarily get that deep though. So if we have a look, that would bring us beyond the 61.8. We pop that into wave 2 for a moment. It would be somewhere between the 61.8, the 78.6, maybe even the 89. We come back in 3 waves, we test this, and then we move higher. So the bullish count as it is dependent upon the 11th of September low holding. And a swing low to come, and then off into new highs. Okay, so that's the primary count. That's what I'm expecting to happen. I think we might be done, but it seems a little too fast in terms of a downward move to have been complete. I think we've got a bit of a retrace to come and then a bit lower to come, but we'll see. If we swing to new highs from here, we can say that's 1 into 2 complete. Okay, so that's the primary count. And let's remove that polygon. We don't need that arrow really, or that retracement. Okay, so here's the alternate bullish count. Let's just zoom back. We've had 3 waves into a B, which is why we broke this initial trend, because that was the A wave. The B came up to break it, and now the C will move lower. This is the idea that we didn't top in our first wave over here, but we actually topped over here, and we've had 5 down into A, 3 back into B, and now we'll come back into C. Now, we may hold, as you can see, I've got a parallel channel here, which is a base channel, based off of these lows projected forward. There's no guarantee that will hold. It could do. We would end up somewhere between the 50 and the 61.8. But if this is going to be a zigzag as a wave 2, and it's coming off of a major primary low from last November, I would expect this to be a deep correction. Deep correction, because it's got to really fuel the bears and to really give them a sense of overconfidence, because only by swinging low enough to grab liquidity off of these participants would we be able to refuel a rally higher. You know, so it's a strong alternate. I feel we've broken that downward resistance. If we do backtest it but fail it, and we take out that low, that September the 11th low, then this will become the bullish count. And I'll be expecting a further 5 wave move lower, perhaps the 61.8, perhaps even deeper to the 78.6 or even the 89. Break this base channel, get everyone super duper bearish, come in for a double bottom with last year, roughly a year apart, November to November perhaps, and then we'll be off of a double bottom low, off to the moon. Right. But it is an alternate, it's not the primary. So now let's look at the bearish and see how that looks on the shorter time frame. So we've had our W to here in June 22. We've had A, B, and then we're still using 5 waves up into the C. I'm choosing to take the dominant pivot of the 5 wave move into the high here in July, because it just makes things a lot cleaner. Because we come to a dominant high and we have 5 down off of it. You can't get simpler than that from a bearish point of view. Now we've retraced just less than 50% of this move down so far. Well, we've come into 50% zone between the 50 and the 61.8. We may be done. Right, we've had a 3 wave move. So if you're a bear, right, giving that the benefit of the doubt, we've had 3 waves up into a 2. We're coming down for a 1, back for a 2. We will not make another high beyond October 23rd, and then we will collapse, and I mean collapse, in a wave 3 of a C, of an A, of a B, of a C, because we're looking for a Y, so 3 wave moves. So we will get 1, 2's done, 3 collapses. Now if we swing higher again, then it is still possible we're looking for that wave 2, but we're doing a double zigzag, or perhaps some other corrective structure. Either way, the invalidation point for this count is back here at this high, so let's pop that in. 3, 1, 8, 1, 8. Right, so a wave 2 completing before that level, 3, 1, 8, 1, 8, which is of course in our bullish count our major pivot. If we break that, it's bullish all over. Okay, so we've got some work to do yet as the bulls, and the bears at the moment have retraced into the 50 to 61.8 zone, straight back into resistance. Probability for the meantime on their side while that high holds. It is only from an Elliott wave point of view, a structural point of view, that we have 5 down and 3 back. I can't contradict myself because I'm all about 5 up and 3 back. You got to be about 5 down and 3 back. Okay, but in the longer term, I prefer to see that as a 1 and a 2 and a 1 and a 2 off of an A, B, C, and the 5 waves is not an impulse in a 1, it's an impulse in a C. But that's how you should look at it. Well, not should, there is no should. That's how I would look at it from a bearish point of view. Okay, so that covers Bitcoin. Let's come over to Ethereum now. Ethereum has some interesting features here which are not present in Bitcoin, which I think are far more technical from a classical analysis point of view. Okay, so let's just point these out first. So here is a base channel off of the June 22 low. Now remember, Ethereum never made another low. So it bottomed in June 22. So if you're a bull, we've had 5 up, 3 back, 5 up, 3 back. Everything's looking cushy. You've been rewarded for assuming that was the low. If you've been bearish this whole time, well, let's hope you haven't been trading bearishly this whole time, because you're a fair way off of that low. It wouldn't be the end of the world, because we could still be making that bearish setup. But there's a couple of problems I have with that sentiment. So let me explain. In a bearish setup, this base channel would be a typical corrective channel because we led with 5. Okay, so the idea would be that we would move up in an A, come back in a B, and move up in a C. And we would look for that kind of 1-to-1, relationship, which we wouldn't quite channel, but we would come up to about 2,500 if we were to move towards parity. Now, we didn't. We got a shorter C. Now, that's fine, but it's less typical. So, what actually fits better is this retest of this upward trend to the tick, as we can see here, and the completion of this corrective channel. So let's take a look at that same idea again. We've had that larger corrective channel. If this is a 5-wave move up and a 3-wave move back, this is a corrective channel. Okay, and as you can see, we go from point to point to point, straight on support, straight on the long-term trend line, and that's a much better look for a correction. So let's have a look at how it goes 1-to-1. It goes perfectly 1-to-1 and channels perfectly. This does not channel perfectly, and therefore looks less like a correction and more like a bullish accumulation, where we have a series of 1s and 2s. We have 1 to here, 2 to here, 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 and then it's fucking party time. Pardon my language. So if we are going to hold this low, it is getting very close now to becoming an extremely explosive event, an upward move of extreme extreme magnitude, let's say. And I know that sounds like bull porn, right? But we have a bearish count to consider as well. But before we get ahead of ourselves, we've broken the same minor pivot as we did in Bitcoin. We have yet to retest this back downward trend. We may be in the process of doing that now. So this is 1, this is 2, this is 1, and this is A, B, C, 2, and then we'll get moving. So backtesting that trend would be perfectly normal. If we break the September the 11th low, the same gig applies as we said in Bitcoin, which is, the current bullish count as we have it is incorrect, and that would be the invalidation point. So let's just pop that into view, and we will take those two and we will put them in the primary count. Like so. And now let's have a look at that primary count. So we come up in 1, 2 intermediate degree, 1, 2 minor degree, 1, 2 minuet, 1, 2 sub minuet. So we are now within the 3 of the 3 of the 3 of the 3. So we are looking to, sooner or later, after this correction finishes, we're looking for a very violent and explosive move higher. We've got that major pivot at 2028.85 to take out, and then we've got a new high, so we could call that a minor pivot really, because if we want longer term confirmation, we need to take out the prior high. So let's just put that in, and we'll call that the major pivot instead, and we'll zoom out, pop a price tag on it, and 2138.44. like so. Save that. Okay, so that's the bullish count. We've gone 1, 2. We've come straight back to trend, completed a perfect corrective channel, looking for swing high at 2028 and a new high at 2138.44. If it is 1, 2, 1, 2, 1, 2 into 3, 4, 3, 4, 3, 4, it will be a very violent and explosive thrust up over just probably a matter of months. And given that time frame, and I mean to new highs, when I say a matter of months, I mean new all-time highs, probably by spring, could be sooner if we have a kind of insane wave 3 break, acceleration. It could be summer next year if it's a little bit more conservative, but either way, if this count's correct, we're off to new highs, and we're off to new highs relatively soon. So that's enough bull porn. Let's now have a look at the bearish idea. Right, we'll put these two in the primary. Okay, missed the folder. Save that there, and let's bring up the bearish count. So once again, same idea. We didn't quite make it into the 50 to 61.8 target zone. We got close to it in the 3-wave move. This could be 1, this could be 2, this could be, well, it can't be 3, so that's a bit problematic, but it could be 1, 2, 1, 2, 3, 4, 3. So I'm trying to think, can we get an A, B, C in here? Not likely. So maybe we're doing a double zigzag, and we're going to come a little bit deeper. Right, one to here, there, and then another zigzag into here, and that will bring us to the target zone, or perhaps we're done. Okay, and we've done the wave 1 and the wave 2, and now we are going to collapse downward. So we are at a bit of an inflection point. If we've completed an A, B, C zigzag off of the low for Ethereum, we are now going to look at that huge 1, 2, 3, 4 and 5 wave move down, and this would be the 3 of the larger 3 of the A, B, C. So if we're done, the bears need to show up, and they need to show up in force, because this is going to be brutal. So that's the bearish count. So once again, September 11th low needs to hold for the bullish count to be true. We cannot come back beyond this swing high here for, oh, hang on, bear with me, for the bearish count. So I'm just going to put that up there. I'm going to say that's the invalidation point. I know I've got one here. That was in case this turned out to be a 5-wave structure. We'll keep it there just because it puts it beyond the shadow of a doubt. You know, if we go to a new high, there's no way it could possibly be bearish. Okay, but in the meantime, we'll put the wave 2 invalidation point at minor degree. We'll put that here at 2028.85. And then we'll save it there. Right, so that's it, guys, really. Shall we have a very quick summing up here in the Ethereum? I'm just going to put those into that bearish count. I don't think I've missed anything. This is all a bunch of other stuff that I've been discussing on my live streams with my members, but I think that's really all we need to know. I pointed out this little head and shoulder structure we've got going on as well, the break of that downward trend, a retest, you know, snap some liquidity here at resistance, get rejected. You know, this is all perfect procedure for coming off of a low. Right, into resistance, back test the downward trend. Let's just remind ourselves where that is. Okay, so come off of a low in a head and shoulder structure, find resistance, bum bum bum, grab some liquidity, come down, back test the trend, grab some more, swing to new high. It's looking good so far, but it's never a guarantee. If we were to break down for that September 11th low, then it's all about that bearish count, and well, of course, we've also got the bullish alternate of a deeper wave 2 correction as well to consider. But that's where we're going to leave it, guys. Thank you for joining me. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, or as few and as far between as they are. And if you're interested in accessing the Elliott Wave series, which I have on my Patreon, there's a link in the description box below. I'm still doing weekly live streams on there, still trying to answer questions when I can. I am very busy, but if you want to get yourself an education in how to use and apply Elliott Wave, plus a whole bunch of other technical analysis videos, and access to the monthly dividend calendar and stock raising system, it's all there and available for you on the Patreon. So Take care of your, excuse me. Take care of yourselves, guys, and I'll be back with you as soon as I can. All the best. Bye bye.